If you're thinking of buying a condo in Toronto, you need to hear this right now. You see condo prices spiraling, you hear the market is slowing, you're right, but that's only half the story. Right now, you can buy Toronto's condo for less than what it cost the builder to pour the foundation. Developers are hitting the brakes. They're canceling projects. They're letting land sit idle. Because for them, building right now is a guaranteed loss. If you buy today, you benefit from the dip. But if you ignore why they stopped building, you will pay the price in 2029. This is the truth about the Toronto condo paradox. Let's dive right in. Hi, my name is Zen. If you enjoy my data-driven and number-crunching real estate updates, be sure to like and subscribe. Condos were king in Toronto, and after the crash, when will they ever come back? That is the question a lot of people are asking me right now. I can tell you from looking at all the data, all the stats, which I will be releasing in my end of the year recap later on this month, I do not think 2026 is going to be the year the condos are going to make a comeback. I think there is more hurt to happen in 2026. And depending on what the economy may look like at the end of 2026, so like Q3, Q4, we may see sales go back to closer to the 10-year average. I'm not saying prices are going to go up. I still think there's a lot of pain in that segment. But we do have a very glaring problem, which I have addressed in the past before, where we're not building enough condos for when this current supply actually ends. The amount of supply we have that's coming onto market, it will eventually stop. There are no sales right now, which means there's gonna be no construction, which means there's gonna be no new units in future time, call it 2029, 2030, 2031. And that is sowing the seeds of another condo boom. It's really crappy because it's just cyclical up and down, and people are gonna get hurt. But it's very obvious, and let me show you what I mean. Because when we look at this chart, which talks about the Greater Toronto Area and Hamilton condo starts, you can see it was booming all the way up until 2022, which is right here in the third quarter. And that's when sales were going. And when you had sales, you can go get construction financing, and then you can actually go and build this thing. But when sales slow down, they couldn't get the quota to actually go get construction financing, and they can't build. And sometimes even if a builder could sell a unit by dropping their price, they may not sell it because when they go and build this thing, it's almost a guaranteed loss because they sold for less than what they needed to with a lot of the cost that's going up. And this is something I'm gonna be breaking down for you on a line by line item later on in this video. So this is why you have a lot of builders sitting idling, twirling their thumbs, sitting on the land because the cost to hold that land is gonna cost them way less than the guaranteed loss that they would have by building these projects at a loss. This is why we will continue seeing construction starts keep going down, 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 and down. We're probably going to have another 5 years of very low construction starts, and the construction starts will not perk up until the resale market comes back, until prices come back, where the confidence in real estate comes back, where people buy pre-construction again. This chart over here is breaking down all three different types of inventory that is available in the Toronto condo market. And let me break it down for you so it's easy to understand. This dark orange spot over here is the active listings. This is what's on the MLS right now. So you can see we are right now over here closer to 9,000, and it's very, very, very high. We got to that point during the pandemic when nobody wanted to have a condo, but we are likely continue going upwards. And I agree with this projection and this forecast over here. And that's kind of why I think there's still gonna be more pain in 2026. And as long as investors who are holding out and hoping that the market's going to get better slowly start to capitulate, they see that prices are going down. There's lots of inventory. Rents are going to be going down. They're going to want to sell. And I think we're going to see a lot more new listings in 2026 spring as well. Then you have your black line here, which is newly constructed, newly built by a builder, but it hasn't been sold yet. So it's sitting on the builder's books. You can see that segment of the market is going to get larger. And then you have the light orange one over here, which is unsold units, but they're under construction. This is where I think we may have some problems and where I think end users may take advantage of it if the layouts are good. These are units that will be built because they're already under construction, and they may be sold at a discount to when the project first launched, depending on the timing of the project. And this is where you could actually get a good deal from builders if they're selling it. So when you look at just 2026 over here, the amount of projected and forecasted inventory is going to get close to 20,000 units that will be available. Hey, it's me interrupting myself. Ready to make a move? Just one free call. No hassle, but decades of experience to work for you. Which leads me to why we have a lack of supply, because the economics of building a condo right now just does not make sense for the builder. I'm going to go through each and every line item here and explain things to you. But the first thing I want to draw your attention to is in 2014, so more than a decade ago, the builders were making a profit of $30,000 on the actual unit that they're selling for $291,000, or a 10% profit margin. That's totally normal. Now, last year, if they were to build, because of all the costs, they would have to build at cost of $609,000. And they would have a profit of $9,000. So how do you have your price almost doubling from 2014 to 2024, but your profit margins go down? It's because your input cost, hard and soft, hard being your construction and your land costs, and your soft costs being all of these other things, have gone up a very significant amount. And the analogy I gave before was, if you're a restaurant and you are serving food to people, but the cost for you to put food on the table for your patrons is higher than what you can charge for the plate, why would you still be in business? And despite whether people hate or love developers, we have to understand all businesses are for profit. And if they're not making money, they're not going to build. And on top of that, if the project isn't making money, the banks aren't going to lend to them, because why are we going to lend you money to build something where you're going to lose money? Our money, the bank's money, is at risk. You see what I mean? It just doesn't make any sense to build right now. And that's why we're going to have a shortage of condos in, say, 2029 or 2030. Now let's go through the actual numbers and see what the change has been. So I've modified this chart a little bit to show you what kind of percentage increase that we have seen. And you can see that land has increased 57%. It's actually very reasonable. Construction costs have almost doubled, which is why we're seeing such a large increase over here. And those would make up your hard input costs. And the things that don't really make sense, and where there's a lot of people in the building industry pushing back on, is really the development charges right here, which is under municipal fees. These are all your taxes that are part of building the condo. And you can see over here, it's actually increased the most from a decade ago. Then you have your design fees, then you have your marketing, and you have your sales commission and other soft costs, which would be part of like permitting and other things. And then you have your financing costs, which has more than tripled. And this is just like servicing interest, when all this makes a lot of sense. But at the end of the day, in a decade, prices have doubled because of all of these new input costs. And the builders have actually dropped their profit margins in 2024. Now, I'm not defending builders, because they have actually made decent profits leading up to the 2022 peak of the market. This is just the metrics of it in 2024. So if you were looking at this as a builder in 2024, where you're making less money than you were 10 years ago and you're taking a lot more risk, it doesn't make any sense to be actually in business. So that's why land is idle and sitting. Now that you understand that, let's go through the exercise of how we make things cheaper. So the first thing is, let's say we somehow convince the city of Toronto to remove development charges, which is like rolling a giant boulder up the hill. Okay, let's remove that. So you go from 609,000 to 528. Let's say you're building the exact same building everywhere across the board. There's no design fee. Now you're at 518. Let's say everyone will know you're building an amazing affordable project and no marketing is needed. You remove 9,000. Realtors, let's remove them. You're at 464,000. All the other soft costs like engineering and everything, we're just going to copy and paste every single building across the city as the same thing. We don't need them. And then financing, let's assume the builder building this project doesn't need to borrow any money, and they are well funded to build a few $100 million project, and they have that cash sitting aside. Boom. You're at $363,000 just in hard costs to get this thing off the ground. That is your bare bones cost, because you still need to buy the land and you still have to construct this. But let's be real, we're not going to be able to remove all of these things. I think financing is going to be a given. It'll probably still stay there. Your engineering will stay there. And let's say the city of Toronto is nice enough to reduce development charges by half. You're still at $500,000 to build something. And this is what I've been talking about. This is the cost to replace a condo right now. And the reason why I'm showing this to you is because the economics don't make any sense for us to be building more units. But the arbitrage for anyone who's a first-time home buyer right now is to buy an existing product where the cost for you to buy is less than the actual cost to rebuild it. And this is what I've been saying for a long time. Your replacement cost is higher than your actual cost to buy this product. So let's compare apples to apples, looking at the 500 square feet unit right now. Quick sidebar, if you're buying but not sure where to start or what's even a good deal, just hit the link in the description below, tell me what you're looking at and I'll break it all down for you. No fluff, no BS, just real talk from a human and not just another chatbot. This unit over here is exactly 500 square feet. It sold a couple weeks ago for $470,000. If I do the math, $609,000, what it cost to build minus the $470, you're looking at a $139,000 difference. This is exactly why nobody is buying pre-construction unless they absolutely want a specific unit, generally usually with a terrace. And this is actually a very comparable building because it was recently finished. It's a 3-4 minute walk from St. Clair Station in a very desirable area. And there's really nothing wrong with the unit itself. Pictures could be a little bit better. And the floor plan, if I were to critique it, is that it probably shouldn't have been an interior bedroom, which a lot of people don't like. But again, you're at $470,000 for a 500 square feet, 1 bedroom at Yonge and St. Clair. That's walking distance to the subway. Pretty good deal relative to new build. So what do you get for $609,000 then? You get this unit that sold for $609,000, 658 square feet with parking, and it's a 3-minute walk to St. Andrews Station right at University. It even has a den in it right now. That is what you get for $609,000. And you can see here, this is actually a wonderful unit because this overlooks the Grange Park area where there aren't many high rises. So for an entertainment district building, it actually has unobstructed views that aren't likely to be blocked for a very long time. Then you can see you all have a den here if you want to work from home, which is reflected in over here. My only critique of it is you kind of have to go through the den to access the bedroom, which is kind of an interior bedroom, but at the very minimum, you can walk through the bathroom over here. And the building is actually maintained very well, and it actually looks like this building may even have higher ceilings because it's on the bulkhead floor. So this would be what you get for $609,000, and it's a good deal. And this is the type of product I'm actually seeing moving in the condo space right now. Usually comfortable layouts, so a 1 bedroom being 600-ish square feet with parking. And that's very key because we stopped building condo buildings with parking in like 2017 or so. So you need to get into that older building to actually get parking most of the time. And your 2 bedrooms that are larger are actually doing fairly well. So these are like your 900 square feet units and plus and beyond. And this is exactly why this unit actually went into multiple offers because it was listed at $499 and then sold for $608. It's because a good unit in a good building with good square footage and good layout and parking is actually surprisingly hard to find because we've built so much garbage in the last few years. So in this market right now, yes, prices are going to come down, but can you find that right property that is like a 10 out of 10 or 11 out of 10 and buy it at a fair price? Yes, because it's better to buy a good property at a fair price than to buy a fair property at a good price. And in this market, if you can get a good property at a good price, that is actually the win. And that's what a lot of our clients who are first-time home buyers are doing right now. And if you're a first-time home buyer who's going to skip the condo right away and go straight to a ground-based housing like a townhome, make sure to check out the video that's on screen right now where I break down the 6 different types of townhome in Toronto and which ones to avoid and which ones have the best value. I'll see you in that video. Until next time, your move, your future. See ya!